Hi everyone, welcome back to Be Rich. Whatever momentum I had has left the window because my friend Karthi is behind the camera and he dragged my feet and he kind of killed the buzz I was under with the energy vibe I was having. So if you don't like my energy right now, it's Karthi's fault, Valluvar's fault. So put it in the comments. Hey Valluvar, chill bro, chill. Anyway, back to serious news. Yesterday I spoke about Elon Musk and Trump and the lack of brotherly love which is happening there and why it has actually happened. It is not because of ego war or because of ideological reasons. It's basically boiling down to dollar. And Trump was elected by Elon supposedly, or Elon claims so, after spending $250 million, like I said yesterday, that he was hoping to have curry some favor with Trump to get more things done for his SpaceX and his X and of course his original baby Tesla. Trump unfortunately was swayed by the other people in his party, the other party elders, and he's gone ahead and destroyed Elon's dream. The cash cow, the kaching which was there, is going to be no more. And like I said, you have to learn to look at the broader picture and learn to read nuances and not go on past data for a company, but look where the future is now, because the landscape for most companies, I would say every company on the globe, has changed thanks to Trump's tariffs. And today's video is an extension of that to show you in a small way the repercussions we're going to have because of Trump's tariffs and the big deal, big beautiful bill, or whatever he wants to call this. So how is the supply chain going to affect, the tariffs going to affect your supply chain is a question. And what should we investors know? So this is Be Rich and this is Vinod. So let's get right into this. So yesterday, like I said, we spoke about Elon. But let's quickly first catch up on Trump's liberation tariffs. This reciprocal sweeping tariffs he first declared jolted the globe in April, where the stock markets immediately tumbled and crashed. Of course, from there, things have recovered and things have moved back because of all the pauses he announced on these tariffs. UK was the first one to strike a deal in May, and it was hailed as a blueprint for others to follow, and we were promised that others were going to follow very soon. And guess what? 2 months later, Vietnam is the only one that has managed to secure a handshake, while everyone is still scrambling, including us. Meanwhile, the tariff revenue in the US has jumped by 4-fold year on year, but the imports alone from China have dropped by 48%. Businesses, what are they doing? They're saying, let's wait and see, because this is rather confusing. Why are the companies so frozen in action, or being, as they call, inaction? Well, the mess is basically shifting a factory from one country to a new country or a new location. It's not like changing dinner plans, unfortunately. These things take 8-9 years of investment horizon, planning, and thought out processes in supply chain and logistics. And these are massive, massive capital expenses these companies carry out and cannot be done on a simple wish. So though the policy Trump is expecting to change and the mind shift to change, it cannot be done in ground reality. And talking about policy, the way he operates, we don't even know what his policy is. It keeps changing from day to day, hour to hour, minute to minute. And he very famously came out and said even he doesn't know what he's going to do tomorrow. And if with that kind of an outlook, it is very hard for a business to get down to doing any kind of planning in terms of investments. First, he gave the tariff shock. Then he gave the 90-day pause. Now, from a panic, we have qualified concerns in the market. And that is why the market is sitting the way it's sitting. Don't be fooled by the lack of movement in the market, that everything is fine and we have all absorbed the shock and we're moving forward. Not at all. Because the deadline now has been set to 9th July, where fresh deals are not there and uncertainty is back in full blast as we turn on the alpine blast, as they say. As a result, companies are now stockpiling on goods in bonded warehouses up to 4 times the normal cost. Can you imagine if you're a company, you're a business, and you have to put your stuff into warehouse and lock it up, and you're looking at not 1 time, 2 time, but 4 times the normal cost for storing these things. Ports like the Rotterdam port are seeing rerouted cargoes and rising congestion. This is not a good sign because these are costs which add on more and more to businesses, and finally who gets to pay all these bills? It's us as consumers. This doesn't mean higher prices for just one or two products. It means higher prices across the board, from toys to steel to anything. So this inflation we are looking at is hidden from your sight maybe, but it's going to be start hitting your shopping bills very soon. And this is what Jerome Powell, the Fed, and other big central banks have been warning about, and that's why they've been hesitant to make any dramatic moves on interest rates other than when it's warranted and when it's needed. If inflation comes on, the ripple effect is going to be massive. That's why a lot of the deals have been put on ice. A third of the global deal makers say they've been paused or reworking deals because of this uncertainty around tariffs. Big names like Boeing's navigation unit are now all off the table. Private equity firms sitting on billions of dollars which should be in the play, which have been spent for businesses, have all been frozen thanks to the unpredictability of the tariffs. It's killing the confidence in the market, and it's very apparent for those of you who are in the know. Irony is that Trump is expected to come back in his presidency after Biden and unleash all this deal making boom. Art of the deal was what was expected. Deregulation, that was expected. But what we have got instead, something totally we did not bargain for, is pure chaos. Even Elon is left wondering what has he done. And that is a lot if you really think about it. There is something known as friendshoring, and it is thought of as a quick fix to the problem. And what friendshoring is companies are looking for countries which are friendly and trying to shift their global supply chains to these friendly countries. It may sound very good on paper, but in reality, what has happened is, in the recent survey done by Bain, has found 80% of CEOs who planned these kinds of reshoring or friendly shores have only done 2% of it. And a lot of you are wondering, why is this so? That is because these so-called safe countries, moving factory means new land, new labor, new logistics, plus every product is not easy to reroute. Lithium-ion battery factories may be easy to reroute, but laptops factories not so easy to reroute. T-shirt may be easy to reroute. Believe it or not, relocating a socks factory is not so easy to reroute. So this, coupled with things which are happening in Europe, for example. Recently an article came out in Germany. The Germans are worried about serious labor shortage because renewed efforts on expanding their armed forces. Young Germans are running and joining the German army, and that is creating a larger problem in labor shortage in Germany. And there's a huge resistance to migrants coming inside the country. Then we have Italy, for example, where the Prime Minister was elected on anti-immigration popularity, that she was against, her party was against migrants coming to Italy. Now she herself has come out saying she is going to issue 500,000 new visas just for migrants to come to Italy because they are also having immense labor shortage. So this begs the question, where can we build these factories? Where can we move these factories? Where is it going to all happen? So the big real risk here is not inflation, it is stagflation. Because the biggest danger immediately is just not prices going up, it is that the growth rate itself is going to start dragging down. The average tariff in US now stands at 15.8%. That is the highest it's been in almost 100 years. You have to go back to 1936 to see these kinds of tariffs from the US. The World Bank and the OECD have downgraded the US's growth forecast because of the unpredictability in trade. Not that people don't want to do business. People want to do business. People are ready to buy. People are ready to supply. Things are ready to go through. But because of Trump sitting in the middle of all this and creating so much of unpredictability, people are frozen and wondering what to do. So steel tariffs, for example, you may double them by 50%. The producers of steel are all very happy and they're smiling. Buyers have to pay more. In 2018, for example, this kind of tariffs led to 1,000 new jobs, but that killed 17,000 jobs downstream. This is the same story when you look at the policy which Trump is trying to do. Quietly, the leaky costs around the entire economy is happening, and this is where the problem lies. So what do we do as investors? I told you about Tesla. This now applies to all companies around the globe. this pain which we're seeing is real and is coming. So please be careful when you're investing. Don't go by past data, past projections. That world, as famously as the Singapore Prime Minister said, is over. We're living in a new age now where global trade and global connectivity in economics is being changed rapidly thanks to what Trump has done and what he's continuing to do. So be careful if you are planning to invest in areas and markets you're not aware of what is happening. Just don't look at a business. Pay attention to macro headwinds too, like what is happening with the dollar, what is happening in the European bond market, like I said in the previous video, and what I talked about Elon and what is happening inside the US itself. As an astute value investor, you should be able to see all this. Of course, there's a lot of noise. Filtering the noise and deciding what is important to you depends on your goals and what you plan to achieve in the next 10-15 years and the roadmap you have set for yourself. Being anti-fragile means being ready to change and being agile as things change in the market. You should also have the same mindset in your investments. Anyway, thanks for watching. This is Vinod on Be Rich as always, trying to give you a little information and little insight to what is happening in terms of global markets, macroeconomics, and also some investment ideas. Like I said in the previous video, I would be ever so grateful if you could put down in the comments below the companies you would like me to focus on this week in the US, in Europe, in Japan, any other market in India. If you do put some Indian companies, look forward to me talking about it on Instagram rather than here on YouTube on Be Rich. So that will be very helpful so I can get the kind of content you've been waiting to watch on this channel. And of course, Shashwat is back in Chennai. He's here for a few months on a break. I'll try and drag him onto the channel a few more times to have some interesting conversations with him. Anand is also back in Chennai and he's promised to come and do an appearance or two on our channel here too. That is also something to look forward to in the following weeks. So thanks for watching Be Rich. I hope you had a wonderful weekend and you're recovered and you're rested and recuperate to get back into it. Monday morning is another opportunity to start investing all over again. So look forward to that. Thanks for being with me on Be Rich today. Wherever in the world you are, whatever time of the day it is. From here, Chennai, it is evening, so I'll wish you a good evening. Thank you.